Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Crawley.
Well, it's Tuesday, so you know what that means. It is the Tuesday edition of Wilmington Mortgage, and I am the aforementioned host of this program, Tyler Crawley, of course, loan officer, Town Bank Mortgage, right here in Wilmington, North Carolina, where we break down the top stories of the day impacting mortgage rates, assuming I am not sick, not on vacation, nor is it the Azalea Festival. Other than that, I might get busy too. So there's like 4 things that can keep me from doing this show. But other than that, I am here behind this chair talking about rates. So this week is actually going to be very, very light with regards to economic data. It's one of those, it happens like every 2 months. There's just this absolutely just slow week. Looking at what's going to be happening this week. So Tuesday, today, is like the biggest day. We got retail sales and then pending home sales. And that is almost it for the week with regards to domestic economic data. We got some UK inflation data on Wednesday, Japan inflation data on Thursday, and then our weekly jobless claims on Thursday, and then University of Michigan's Consumer Sentiment Index. But those aren't big. So, I mean, it's really like today. Like today is the day. Now, there is something else happening today, and that is Kevin Warsh will be testifying in front of the Senate Banking Committee, who is the committee that decides Fed chairs and whether or not they'll vote, and whether or not the vote will then go to the entire Senate. And there is some already controversy before the testimony or the hearing. That's what I was looking for. The hearing has even begun. And that is, we know Tillis has said that he's not going to vote for Warsh. He's not going to allow Warsh to move forward, or he's not going to vote for Warsh, even though he likes Warsh. He said, hey, listen, he's known Kevin Warsh, and he liked the things he's heard from him. He thinks he's a good guy. He has no issues with him. But he says he's not moving forward until the investigation into Powell is finished. Now, he hasn't said dropped. He just said it needs to be resolved. I think is the term he used, resolved. And so until that happens, we could have a situation where Warsh can't get out of the committee because the Republicans have a 13-11 majority in the banking committee. Now, if Tillis abstains from voting, that's 12-11. That's the majority, gets it out of committee. If he votes no, that's 12-12. That's a stalemate. And his vote will not, or his nomination will then not go to the floor of the Senate. So I believe Tillis is going to vote no. But before this even gets started, we already have a little bit of controversy here. Now, on Monday, we did see the prepared marks from Kevin Warsh that he will, say today as he talks to the U.S. Senate committee. And he got it. The big question has been Fed independence, right? Trump pressuring the Fed, trying to pressure Powell into lowering rates. Obviously a big issue. And he does not beat around the bush. He is not ambiguous, opaque, whatever. He straight up says that it is important. What did I do with I just had it. Here we go. Sorry. Wasn't prepared. So this is how you know I do live to tape. I don't edit this. This is just straight up me. And he said, monetary policy independence is essential, arguing that decisions must be driven by, quote, analytic rigor. There we go. Meaningful deliberation. That was a hard word, analytic. Analytic rigor, meaningful deliberation, and unclouded decision-making. He downplayed concerns that a political commentary alone can threaten the Fed's independence, saying that it's okay for presidents and others to say what they think rates should be. And it's funny. There's a great book I've talked about 1,000 times. I'll talk about 1,000 more. Nick Timmeros wrote a book called $1 Trillion Triage about what Jerome Powell and Steve Mnuchin, former Treasury Secretary, had to do to keep credit markets open. So a lot of people remember like, oh, COVID, everyone was worried about the stock market crashing. Then all of a sudden it came roaring back and mortgage rates fell and everyone was buying houses and the economy roared and oh, wow, it was great. People don't realize that didn't just like happen. Like it happened because Jerome Powell and Steve Mnuchin kept credit markets open. I mean, there's a great like quote in the book from someone who said that they had never seen credit markets freeze up the way they did during COVID. I mean, nothing like it, at least in modern history, maybe 29, Great Depression, but not 2008. And so it's a great book, but the beginning chapter is pretty amazing because it talks about how basically since the Fed's really kind of come into its own, so I would say probably, the 60s for the most part, that every president has fought with the Fed. Like they've hated the Fed chair. And it's so funny. You see it, right? Like everyone runs for president saying rates need to be higher to combat inflation. And then they get into office and they're like, we need to lower rates because lowering rates, creates economic activity, jobs, everything else. People's wages go up and everything. Of course, you have inflation risk. But presidents don't really care about that. They want people to make more money. And more jobs and everything else. And so it's really kind of funny. Now, President Trump has done something that no other president really has done. And that's just like openly say how much he hates the Fed chair. I mean, Trump's like, Powell sucks. He's the worst ever. Oh, he obviously, I guess I can't say obviously, allegedly is probably behind the Department of Justice investigation. I mean, Jeanine Pirro's like a huge Trump person. And so that's not something that a president has done before. But every president, through back channels, through contacts, back room, whatever, has been like, hey, the Fed is doing everything wrong. They need to do something correctly, and has chastised the Fed and criticized them and everything else. Trump's the only one that's done it like out and open. He has less tact than previous presidents. But like I said, they've all kind of tried to pressure the Fed in their own way. And Richard Nixon probably is the best example of this. He actually successfully did it with Arthur Burns, where he forced the Fed to lower rates to help him out. And then, of course, he won re-election. And then we all know what happened after that. But then the economy kind of took off, and then inflation skyrocketed. And then, Paul Volcker had to come in and say, all right, we're not doing that again. Said we're going to hold rates as high as we have to make sure this is taken care of, and got a lot of flack for it. But no one, you'll hear anyone say, oh my God, Fed independence. So I think Warsh has a good point here. He even says, quote, simply stated, Fed independence is largely up to the Fed, saying that central bankers must be strong enough to hear competing viewpoints, humble enough to stay open to new ideas, and wise enough to interpret imperfect data, a nod to the uncertain economic backdrop that policymakers face. So he's saying, listen, I mean, anyone can comment. It's up to the Fed to make sure that they're remaining independent. And so, so should they listen to the president because they're the president? No. But does that mean that they shouldn't listen to, say, like another economist who has seen something in the economy that is impactful and they should be concerned about, but, he's not part of the Fed, so we shouldn't listen to them? No. So they need to hear ideas and then be like, all right, that's a good one, that's a bad one, but it should be based off of the idea and the actual, merit of the idea, not just who is saying it. It's sort of what Warsh is saying. And I think that's pretty good. And then Warsh also had a good point in which he said, the Fed needs to stay in their lane, saying that the Fed risks undermining its own independence when it strays beyond its core mission. Venturing into fiscal or social policy, he says, exposes the central bank to criticism in areas where, quote, it has neither authority nor expertise. I think that's a good point. So I like these comments from Warsh. I think they're pretty good. I don't think they moved the market today at all. We had the 10-year was up about 1.5 basis points. The 30-year fixed rate index, according to the Mortgage News Daily, their index had the 30-year up 1 basis point. So a slight upward movement after a drop on Friday. Nothing to really write home about. So no real impact from really anything that happened today. So we got Warsh testimony. We'll see what happens tomorrow in the hearing. One of the things they're likely to bring up, Matt Grossman and Nick Timrose have a piece at the Journal saying that Senate Democrats plan to press Fed Chair nominee Kevin Warsh over perceived gaps in his financial disclosures, arguing that it hasn't met transparency standard other Fed nominees have met, and that public can't tell whether his investment includes banks the Fed regulates. So in case you missed it, last week, Warsh disclosed assets worth more than $100 million, but declined to identify the underlying holdings of his largest investments, citing confidentiality agreements. Interestingly enough, the Office of Government Ethics conditionally certified the filing, noting it complies with federal ethics laws for all but several dozen holdings. It also said that Warsh will be in compliance only after he divests those holdings, which Warsh has agreed to do if he is confirmed. So it doesn't really seem like there's an issue there, but politics is politics. Warsh's largest reported investments are stakes in a fund run by investor Stanley Druckenmiller, who is, one of the OG hedge fund guys. Very smart guy. Very smart. Interestingly enough, Scott Bessent is also a protege of Druckenmiller. And like I said, Druckenmiller is very smart, knows markets, knows how the economy works. His comments about, some of the fiscal issues that we're dealing with in the United States are spot on. And people say, oh, isn't it a horrible idea this one guy has two proteges in very high positions of government? No, that guy's smart. Scott Bessent's smart. I think Kevin Warsh is smart. I don't think it's a bad idea that these guys are going to be in these positions. These are actually the guys that we should have in these positions because they know what they're talking about. Now, Warsh is going to get attacked because I think he is going to be the richest Fed chair ever, I think. I mean, over $100 million. I didn't know he was married to a Estee Lauder heir. So that's clearly where he got a lot of his money. He did also work in Silicon Valley. I'm not sure exactly when he met his wife and they got married and everything. I'm not sure how much of it he did before he met her or whatever that was. But yeah, usually Fed chairs are not very wealthy because they tend to be economists. I mean, Powell, I think, was like the first non-economist. He was a lawyer. Obviously knows a lot about the economy, but he's not an economist. And economists, a lot of people think that like finance guys and economists are like one and the same. They're not. Like finance guys are very smart, make a ton of money, know how markets work. Economists understand like how economies work, but you can't really make a lot of money on that. Most economists actually are not very wealthy, which is kind of funny. They're like more of the macro level, and then you have finance guys who are more like microeconomics, like they kind of get like the how markets and can see certain stocks and things like that. While a lot of economists are like looking at these sort of overview picture, and a lot of economists aren't very wealthy. I mean, I'm not saying all. I'm just saying a lot of them aren't versus like finance guys. So I think that'll be an issue, no doubt. That'll come up. And then there was something else they mentioned the Democrats are going to go after him for. Staff memos also suggest that he might face scrutiny over his federal negotiating bank bailouts and his ties to Stanley Druckenmiller and other Wall Street investors. That would be stupid. We don't want someone who knows how the markets work. Oh, okay. That seems kind of dumb, no doubt. All right, before we go, do want to let you know, on Friday, if you remember, we did see, obviously I didn't do a show, but Friday, rates fell on the news about a ceasefire between Israel and Lebanon, and what that would do for peace talks between the U.S. and Iran. Today, or I should say Monday, it was reported that Iranian officials were giving conflicting messages about whether they will participate in a new round of peace talks. However, it was noted by, I think, the Journal and the Times that Iran also did this in the lead up to other peace talks. So this is sort of what they do. It's misinformation game. Like, oh, we're not going to negotiate with the United States, and then while they're negotiating with the United States. So the big question is, will there be another ceasefire? What's going to happen with the blockade in the Strait of Hormuz? And we really don't know. And I think that's why you didn't see a lot of movement in markets today, because once again, it's a very short week for economic data. So you're not going to see not a lot of data that's going to move markets. It's going to be what's happening in the Middle East and then potentially what Warsh says at the hearing today. So we will see. But you guys enjoy your Tuesday. We'll be back here Wednesday morning for another edition of Wilmington Mortgage. And remember, as always, do not wait to buy real estate. You buy real estate and wait.